Welcome to the channel, everyone. My name is Tomo, and today I'm going to be talking to you about how you can possibly save interest on your home loan. Like many Aussies, I've certainly been feeling the pinch with these interest rate rises, and with this short video, my hope is that I can share some knowledge with you. Now, if you like the video, please hit the like or the subscribe button, and equally, if you don't like it, please leave a comment. Let me know how we can make it better. This is my first video, so I'm always happy to take on some feedback on how I can make it better. Now, I do have to say, this is general advice only. You should consult with your professional financial advisor or accountant before you make any changes to your financial position. And the video today will be a bit different to maybe some videos you've seen. I'm trying to do it a bit more educational to actually show you how interest works and how you can save interest. So we're attacking it from that angle today. So with that, let's get to it. Now, the way I like to think about interest is that it's simply the cost of money. You borrow money from a bank or a lender with the promise that you'll pay them back one day. And interest is simply the cost of having that money. So in a very simple example, we borrow money day one. The longer it takes to pay back, the more interest you'll pay. Versus you borrow the same amount of money, you pay that back in a shorter period of time, the less interest you'll pay. That's a fairly simple example to start things off. Now, what's really important around interest is how it is calculated and when it accrues. And accrue is just a fancy word for being added to your loan balance. So generally speaking, interest is calculated daily and accrues monthly. And when you sign up to a loan, sometimes the default terms that you can sign up to are monthly repayments. So in this example, we'll use some simple numbers. So we have a $100 loan, but the first day of the month and the last day of the month, and we may only make one repayment at the end of the month, say $10 to bring the loan balance down to $90. So in this case, because interest is being calculated daily, each and every day, interest is being calculated on this $100 loan balance all the way to the end of the month, okay? So it's being calculated on a higher loan balance. Now, this is the really important part. If you can change your repayment frequency without any penalties from your lenders, it can be very beneficial for how interest is calculated. So we'll use another example, $100. We're still going to pay $10 over the month, but we're going to split that into two payments, $5 halfway, so that takes down to $95, and $5 at the end. So we're still in the exact same position, $90 as in the first example. However, in this more frequent repayment option, where we're making a repayment fortnightly, you'll see interest is being calculated daily on this higher $100 balance. And then look at this, drops down after the loan repayment is made on a lower loan balance for the rest of the month. Now, you might not think this makes much of a difference, but over the life of the loan, it actually makes a huge difference. And I'll show you an example of that right now. So I'm a bit of a finance nerd. I actually like to calculate the interest on my mortgage using a spreadsheet similar to this one and compare that to what the bank charges me. And I normally get within $1 or $2, which works for me. So I've prepared this spreadsheet just to help for the sake of an example. Now, I've moved all the detail down here off the screen, so we're not getting confused with the numbers. But basically, this is a monthly repayment option. That's all you need to know about this detail down below. It's a monthly repayment option on an $800,000 loan at the long gone interest rates of 2.19% over 30 years. And you'll see under this arrangement, the total interest over the life of the loan is $291,000. Now, in an identical scenario, however, with fortnightly repayments, I've set fortnightly repayments up down here. The interest under this arrangement is $257,000. So you can see just by doing the monthly repayment option over the life of the loan, there's an additional $34,000 of interest you are paying. Now, this only gets worse as interest rates increase. So if you see I increase the interest rate here to 4%, additional interest is $92,000 over the life of the loan. If we go to 5.6 interest, you'll see it just gets worse and worse. So you can see here in these examples that a monthly repayment option results in a very large additional amount of interest that you have to pay over the life of your loan. I hope you found that educational and were able to get something out of that video. Just to recap, check with your lenders, check with your mortgage brokers and see if there's any penalty for you increasing the frequency of your repayments. Don't be afraid to negotiate your interest rate with the banks, especially after an RBA interest rate decision. If you have any questions or if you'd like to see any other content, please leave me a comment. I'd love to hear from you. See you in the next video.